Hello, I'm Ron Wilson. In this month's news, Australia's inflation rate increased to 1.7% per annum in the December quarter, despite downward pressure from lower oil prices. New South Wales topped the list of the country's best performing economies at the close of 2015, according to the ComSec State of the States report. In international news, the US Federal Reserve held the federal funds rate target range at 0.25 to 0.5% at its January meeting, acknowledging that the country's economy lost momentum at the end of 2015. Michael Pollock has the details.
Australia's inflation increased a little above market expectations in the December quarter, despite the sharp falls in petrol prices. The annualised rate rose to 1.7%, but still sits below the RBA's target band of 2 to 3% per annum. Headline CPI rose 0.4% quarter on quarter to 1.7% per annum in the December quarter, up from 1.5% from the previous 3-month period. The corresponding underlying measure of inflation averaged 2% year on year. A faster increase in the prices of food and non-alcoholic beverages and a slower drop in the cost of transport offset a slowdown in the cost of housing and falling petrol prices. New South Wales remained the nation's best performing economy to the end of 2015, according to ComSec's State of the States, January 2016 State and Territory Economic Performance Report. 8 separate key indicators were analysed by ComSec in measuring the relative economic performance of each state and territory economy. New South Wales recorded the top ranking for unemployment, retail spending, equipment investment, population growth, housing finance, and dwelling commencements. Victoria ranked second for economic performance overall and led the way on the key measure of population growth. The ACT and the Northern Territory were ranked equal third overall. At the end of its 2-day January meeting, the US Federal Reserve's Federal Open Market Committee, or FOMC, acknowledged that the country's economy lost momentum at the end of 2015. Given this economic scenario, the FOMC decided to maintain the target range for the federal funds rate at 0.2% to 0.5%. Final domestic spending remained a positive factor, with support from improving labour market conditions and stronger purchasing power due to declines in retail gasoline prices. Weakness in the manufacturing sector intensified in December, however, with a large drop of 5.1% in durable goods orders, a leading indicator of business investment in the US. At its late January meeting, the Bank of Japan introduced a negative interest rate policy for the first time as it tried to shore up a stumbling economic recovery. The central bank cut the rate it pays on cash deposits by commercial banks in excess of legally required reserves to minus 0.1% from plus 0.1%. The cut, effective 16 February, means bank deposits with the Bank of Japan will be divided into 3 tiers, with the rate on most existing reserves remaining at 0.1%, while the rate for required reserves was cut to 0. Unlike the single negative rate applied to bank deposits placed with the European Central Bank, Japan's move was similar to tiered measures put in place by the Swiss National Bank in December 2014. Chinese economic data released in late January showed the country's economy grew at 6.8% in the fourth quarter of 2015 and 6.9% for all of 2015. This was below the 7.3% GDP growth recorded for 2014 and the slowest annual growth rate in 25 years. Most of the deceleration in GDP was concentrated in the industrial and construction sectors, while output in the services sector accelerated. This trend is consistent with the Chinese authorities' goal to transition the economy from manufacturing and export-led growth to a more private consumption and services-led economy. Australia's terms of trade continued its downward spiral, falling 5.2% during the December quarter 2015 and 14% over the past year. This pushed the terms of trade for goods to its lowest level since 2005. The terms of trade, measured by the ratio of export prices to import prices, has been driven down over the past 3 years by collapsing prices and significantly lower demand for key Australian resources. Export prices fell on average 5.4% over the quarter and were down more than 10% over the year. Iron ore prices fell 9% over the quarter, while coal was down 6% and liquefied natural gas dropped 4%. Import prices, meanwhile, were relatively stable, down just 0.3% over the quarter, but 2.4% higher over the year, largely due to the effects of the falling Australian dollar. In its review of the lending practices of 6 margin lenders accounting for 90% of the market, ASIC found that 5 of the 6 lenders approved double-geared margin loans. Double-geared margin loans occur when a consumer borrows money using another asset, such as their home, as security to purchase shares, and then obtains a margin loan on those shares to purchase additional shares or other assets. Despite the additional risks associated with double-geared loans, ASIC found that in certain situations, 4 of the 5 margin lenders assessed failed to take additional steps to manage the different levels of risk present when approving such loans.